I predict Alibaba stock will be worth $250 within the next 12 months. I will discuss the company, their financials, my DCF valuation model, where this number is derived, then I'll finish off the video with what I'll be doing. Am I buying or am I selling? Here it is, Alibaba, the Amazon of China. They are just an absolute monster. For the 1% of you that don't know, Alibaba is, well, the Amazon of China. They are the e-commerce play in China. Just look at what Alibaba owns. You have Taobao, Alibaba Cloud, Fresh Hippo, and so much more. Oh, my cat Shama wants to say hi. Isn't she cute? Alibaba, what have you done for us lately? It's down 38% in a year. Let's see, is this a buying opportunity or is this a trap? Let's look at the forward PE number of 16.48. That is the price of a value stock. Is this a value stock? Let's find out, but remember that number. Revenue up from $23 billion in 2017 to $109 billion US dollars in 2021. Alibaba is a growth monster. And this is it in graph form. Phew. Alibaba scores A- in revenue growth, which is very good in the sector. Cash, nearly 75 billion US dollars. Remember, this is for a company with a market cap of 467 billion US dollars. So they have a lot of cash for their market cap. EBITDA growth has been slowing, but it's still healthy. $46 billion more cash than debt. Always a good sign. Analysts are very bullish, with a price target of $274.60. Average rating 4.7. Let's look at Q2's numbers briefly. Revenue went up a very healthy 34% year over year. Very nice. But look at that EBITDA, down 5%. What happened here? The year-over-year decreases were primarily due to our investments in strategic areas to capture incremental opportunities, such as community marketplaces, Taobao deals, local consumer services, and Lazada, as well as our increased spending in growth initiatives within China retail marketplaces, such as Idlefish and Taobao Live, and our support to merchants. The year-over-year decrease was mainly due to the partial settlement in the amount of $1.4 billion of the antitrust fine that Alibaba incurred, and a decrease in profit as a result of our investments in key strategic areas. All transactions of RMB were made for blah blah blah. Continuing. So here's a list of those investments and what those and the results of those investments. I've already discussed what the investments are and what are the results. Idlefish is north of 100 million MAU. Taobao Deals is greater than 190 million AAC. Le.me orders increased 50% year over year. And Lazada orders increased 90% year over year. Looks like it's money well spent. Alibaba Cloud is now profitable. This is my main focus for Alibaba. The cloud is a growth beast and will become a growth beast this next decade. I expect huge things from the cloud. And it's currently profitable. EBITDA of 53 million US dollars. Revenue climbed 29% year over year. Now, this is kind of a sticking point for me. 29% isn't a disaster, but it is slower than AWS and Azure. Alibaba needs to improve the growth rate in cloud in future quarters. They explained in the last quarter's results, or the quarter prior to last, it's the result of a large client leaving them. So let's see if this number improves. I hope it improves drastically. Next up is my DCF Valuation Model. But before I get to that, a note. So why is a growth company priced like a value stock? Yeah, it's kind of like Corsair, right? The answer, as you all have guessed, is the Chinese government. The Chinese government blocked the IPO of the Ant Group, and of course the antitrust suit against Alibaba. Alibaba had to pay $2.8 billion and some restrictions were put on the company. Let's face it, I am not a fan of China's strong arm towards its own companies. These stocks are so cheap solely because of the Chinese government's shenanigans. China is going after Tencent now, the gaming company. Let's hope the Chinese government comes to their senses, but in the meantime, we have to price in the uncertainty. And guess what? This is valuation week for the Finance Ninja channel. I plan to release a valuation video every day this week, Monday, today, to Friday. Obviously, today's Alibaba. Also in the cards this week are Tesla, Square, Logitech, Nvidia, and others. I say others because I haven't decided what will be in this week's slate and what I'm going to push to next week. That's why you notice there's more than 5 currently on slate this week. So something will be pushed. Guess what? You can help me out here. In the comment section below, let me know what companies you would like to see me value shortly. Don't forget to click the notification bell and don't miss a video in these valuation series. So here's my DCF Valuation Chart. You can download this valuation model and adjust the numbers, as well as models for Tesla, Palantir, Corsair, and others at my Patreon. You can play with the numbers in my valuation models to see what price is fair for you. So let's get into the valuation for Alibaba. I'm predicting an EBITDA this year of $29 billion US dollars, growing to $73 billion US dollars in 2026. The tax rate for Alibaba kind of jumps up and down, so I just put 15% there. So the free cash flow will grow from $20 billion this year to $49 billion in 2026. Now keep in mind, the EBITDA, I marked them at a 20% annualized growth rate, which I think will be easy for them to beat. Moving on to the DCF valuation, the Perpetual valuation, I put in a discount rate of 10%, a Perpetual growth rate of 4%. That gives you a today's value of $682 billion for a fair value of $251.71. Upside, 59%. And here's my multiple valuation model. This model has an upside of 52%. What am I doing? I already have my position in Alibaba built out, so I'm holding for the long term. 5 years plus probably. The Alibaba story is just beginning. But, a disclaimer, if the Chinese government's shenanigans are a worry to you, do not invest. I repeat, do not buy Alibaba stock if the Chinese government's issues will keep you up at night. Don't forget to smash that like button and subscribe. Thank you to the subscribers, thank you to the patrons, thank you for watching this video, and I'll see you in the next one.